Okay, this next video is going to look at the purpose of the balance sheet. So in the previous video, we talked about the statement of owner's equity, and the video before that, we talked about the income statement. And we need to make sure we prepare them in that order. So we have the income statement first, because we need to find the net income or net loss in order to complete our statement of owner's equity. And then we need to find our ending capital for the month in order to transfer that amount to our balance sheet. So that we're preparing this balance sheet third. And the balance sheet is the third financial statement of the sole proprietorship. So we have one left after this. It is a financial statement showing the financial position of an enterprise by summarizing its assets, liabilities, and owner's equity at a given point in time. It is usually created at the close of the last day of the month or year. So again, if you'll remember when we completed that accounting worksheet, we transferred the balances of our asset accounts, liability, and owner's equity accounts over into the balance sheet columns. And that's what we're doing now, only we're making a separate report out of it. So assets, again, just a review, what a business owns, liabilities, what a business owes, and owner's equity, what the business is worth. Okay, we'll skip over this practice activity. All right, the balance sheet and the accounting equation. The statement of financial position is a detailed expression of the accounting equation. So the balance sheet is basically a detail of this accounting equation. It breaks it down into more details. So this agreement or balance of total assets with the liability of total, or with the total of liabilities and owner's equity, so assets equaling what we owe plus our value of the business, is the reason for calling this statement the balance sheet. They're always equal because these two sides are two views of the same business. Everything that a business owns, so all of our assets, have been supplied to us either by creditors or by the owner. So all of our assets we either paid for on account or we paid for out of our own pocket, so they belong to us entirely, which is our owner's equity. The balance sheet represents an expansion of the accounting equation and explains the various categories of assets, liabilities, and owner's equity. So it breaks it down again into detail, listing all of our assets, all of our liabilities, and all of our owner's equity. The balance sheet is a report of the balances and the permanent accounts, let's keep that in mind, at the end of a specific period. Okay, let's move on here. So to the sections of the balance sheet. Again, we have a heading, so the who, what, when. The who is the business, the what is the fact that it's a balance sheet, and when is for, we said we wanted to make this at the end of the period, so for the month ended March 31st, or for the year ended December 31st, however often we prepare these. The next section is going to list all the assets, so all the separate asset accounts with their balances. And then the third section will list the liabilities, their balances, and the owner's equity, which we calculated in the statement of owner's equity. So let's take a look at an example of the balance sheet. Okay, here we have it. So we have the who, the what, and the when as our heading. It's always what we want to prepare first. Then we want to first list our assets. So we put in the word asset and list each individual asset account that we have with the balances of each of those accounts. So again, we list them all in this first column. So the left column, so indicating that we're going to add these all together. And then we put that total in the right column. So we list all of our assets, we list all the amount of the assets in the left column, and the total of our assets in the right column. Again, with that single rule line indicating we're adding up over everything above it, but we record the total over here. Okay, the next section was our liabilities. So we list all of our liabilities, or the accounts which we owe money still. So we have accounts payable A, we owe $3,000, accounts payable B, we owe $5,000, We add those together, draw a single rule, and list the total liabilities over in this right column. And then we just have one owner's equity account. So this is the third section. We list our owner's equity, and which is our capital account. So we list our capital account, and since there's just one, we don't have to add it up to other owner's equity accounts, so we can just move that balance over into the right column. So then we want to add our liability and our owner's equity together to get the total liabilities and owner's equity, and we record that number down at the bottom. So what we should have our total assets, so this 33,000 should always equal this 33,000. And when it does, there should be a double rule line here showing that those numbers have been verified and we are good to go. So if they don't equal, that means we have an error somewhere. So again, just like we did when we recorded balances or posted to the trial balance of the general ledger, you're going to have to go back and check for any errors that we made in that transfer process.